So now let's go over to one of my favorite stocks, Tesla. You guys all know I've been in this, from the get-go, it feels like, and I've stayed with it the entire year. It's up about 60% on the equity side, and I also trade options around it. Um, we have come up basically into a very crucial level. And the way that we're trading this is we're respecting the trendy edge. So this level right here, and we understand that that trendy edge is derived from a yearly look of Tesla. And when we come to that level, we have to respect it in the fact that it needs several weeks to build above it in order for me to feel bullish about it. So, from a trading perspective, if we're just trading it, not going into earnings, this is really my big over under, if you will. Price has to get above this level. And you'll notice that every time we come up into it, we are creating topping wicks here. But one thing that I do like that we're noticing on the weekly is we have gone what's called inside and up here. And inside and ups the probability suggests that we will continue to move up towards my targets of 464 to 479. Okay. So until we get above that, if you don't want to trade it into earnings, then I would say wait until you get above the trendy edge to look at it. But let's go ahead, and now that you understand that, let's take some of these lines off and let's go ahead and put some targets up here. Okay. So to the downside, what I like to do, and if I didn't say this earlier, is I always approach the chart the same way no matter what. There's no reason to look at a chart differently just because earnings are coming. You do want to take into account that you can get bigger than expected moves. And in that case, we'll figure it out when we come to the Fibonacci's. Now, listen, I'm looking for a move up into the 550 range. I'm not saying after earnings. I think a lot of people are looking for 500. The question is, or it's not the question, timing is the variable. And I just can't sit here and tell you exactly when that is going to happen. But what I can do is look at my chart and try to figure out where we have support and where we have resistance, right? And then we are going to create some zones around that. So once again, this was a really big candle this month here, and we create imbalance there, and that's a little scary because a lot of times imbalances are filled. But I also want to think about how long did we stick around here before this took off. And because we stayed here for several months, I feel like we kind of created a nice base there. Wouldn't you agree? So I would be shocked if we were to come back all the way here, but I would also be happy because I wouldn't mind being a buyer in this area. Okay. So that leaves me with that. Now let's talk about on a smaller time frame what that looks like far as the weekly is concerned. I got the 9 EMA. We've been hanging out here for over a month and a half. It kind of reminds me of Netflix where we keep coming back to lower end of the curve. So the lower end of the curve would be the bottom of this box and we keep coming up towards the top and selling off, right? So this is going to be my support. And what I would do is I'm going to come up underneath that candle. I'm going to use this 9 EMA, which is around 406. I'm going to look at these numbers and oh my gosh, we just always around 420, it feels like. So because we're around 420, that would just have to be a number, a part of my debit spread to the downside. So just like Netflix, I'm bullish overall, and there's no reason for me not to be when I look at my trendy banners here. So my longer term trade would have to be several weeks out to the upside, and I would probably be looking for 465 by 485. So let's go ahead and move this up. It doesn't have to be perfect. You guys get an idea here, okay? And I'm just giving you a couple ideas. So a few weeks out, 465 by 485. And if that's too expensive, you can always just say 465 by 75. Those are ideas, and I'll look at them here shortly. And again, they'll be in the watch list description for you. And then on the support side, I'm going to say 420 by 410. Okay. 420 by 410. And this would be this week. Okay, so a little bit of insurance. And I'm going to put that in that area. Again, the reason why I'd be looking for support here is because price keeps coming back into this area. But also we have an inside and up formation, and we have the confluence of the 9 EMA. And if I were to take the rally that started, which right in here is where it took off, and I measured this, you'll notice also we have a lot of confluence here. That this 9 EMA is also confluent with the 38.2, which is the bullish channel of this move. So I really like this level to the downside. Again, it needs to make sense from a risk to reward. Let me draw this out before we head into SPY. I want to make sure that you understand it. So I'm going to give you a couple scenarios. Let's say that the call debits, and in this case, I'm going to say CDS, call debit spread, cost me, let's say equals $3. All right. And say that they are 10 wide, right? So 10 wide. That means the spread itself is 10 wide. That means $1,000 is the max that is available minus what you paid. So you go 10 minus 3. So the most I can make is $7. Now, how do you make that when it comes to trading debit spreads? So the way that we make this is that, let's say on the call side, I say 465 by 475. It needs to shoot all the way through 475 and stay above 475 in order for me to collect that $700. If it's short of that, all right, and the thing is, this would expire, so these would be on the call debit spread. Let's use Tesla as an example. We have several weeks, right? So it doesn't mean just because we don't shoot through 475 that we won't several weeks later. Okay. The next thing is, let's say that the puts, okay, so in this case, we're going to say the put debit spread, okay, equals $2. So that's your risk, by the way. So if I paid 3, my risk is $300. Let's say the put debit spread is $2 and it is 10 wide as well. That equals a potential of 800. Okay, now what I'm trying to do is I add up the total cost. So 3 and 2 is 5. If one of these hits by using structure, I'm not just like pulling numbers out of the air. Okay, so I'm using my process. If one of these hits, I needed to pay over $500. So in this case, if I were to hit on the put debit spread, I actually have paid for the entire trade. Say in this case, I needed Tesla to drop down 420 to 410 and it goes all the way down to 390. Boom, I get my $800. What that does is not only pay me everything that I put into this trade, but it actually made me an extra $300. And on top of that, I still have several weeks out for the call debit spread to work. Then I would come into the market. I would buy the short side of the call debit spread back if it was cost effective, and I would just try to ride those calls for the remainder of the expiration. It's a free trade. Okay, so that's what I'm looking at. I need to make sure that it makes sense from that perspective. Okay. The next thing, again, just again to reiterate, you don't have to trade into earnings like I do. You can sell credit if you want to. If that's your thing, you could use these numbers to sell credit. I'm not getting in the way. I don't like selling credit into earnings. I've seen too many people look over here at the info, the data they give to all of us retail traders, and it say something like, oh, it only has a percentage of blah 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 to do a 1 ATR, and then you wake up and Tesla's up $70 and you're in bad situation. So I would rather use a debit spread, combine those two. And that scenario I just gave you was $500, and I know that I could lose $500 going into this idea. Okay, so just want to be very, very clear on that. Now let's go ahead.